Singh, co-founder and CEO at FX1 Academy. He's, of course, joining us right here on set, and we also have on deck Beat Lenner, Chief Global Strategist at LGT Capital Management. Gentlemen, thank you both for coming in. Well, let's talk about some of the big currency moves that we saw in the Friday session. The yen racing to a 14-year high against the U.S. dollar, and yet, within a matter of a few days, it seems like all is the way it was prior to all the jitters that investors had over the developments in Dubai. What are your thoughts? Is this really just a one-off situation?
Well, here's my views, Chloe. The thing is that in the current financial climate, a lot of people are in this mode where they will sell first and they will think later. So what happens is when they sell off, they're going to go into safe haven currencies like the US and low-yielding currencies like the Japanese yen. So that's where we saw it went all the way to, I think, below 85. It went all the way to about 84.8. But having said that, as we see the news panning out, that the Abu Dhabi neighbors are coming in, the central banks of the UAE are coming in to help Dubai. So that's really quite calm the market, so to speak. And you're seeing all the losses that the high-yielding currencies have given, the euro, the pound, the Aussie and the Kiwi, they've all come back up to about over 200-300 pips. So it was more like a blip. I would call it a catalyst correction more than anything else. I don't see there's much concern for major panic in the markets.
But is it enough, really? Are the moves that have been taken by policymakers, by the United Arab Emirates themselves, enough to calm fears about this situation long term? We're still only seeing the very beginnings of reaction to this news so far.
Yes, the currency markets are probably the first to always react. And what happened was that over the weekend in the U.S. Thanksgiving holiday, what we saw was a real great volatility charge simply because of the thin trading. But as more and more traders are coming on board now to see what's going to be happening, what's panning out in the markets, really I feel that the markets have already priced that in. If you're going to see the high-yielding currencies like the euro, the pound dollar, the Aussie dollar, they've all made up movements easily over 300 pips in the FX markets. If you were to see that today. What is fresh out of the oven, though, is that the Japanese government is coming on board with a $31 billion stimulus plan. So that's going to really help to push the dollar yen a bit up. So traders are a little bit wary of that. They're going to see how the BOJ and the Minister of Finance are panning the news out.
And very quickly, Beat, we're just hearing that Nakil saying that Sukuks to be suspended on the Dubai NASDAQ market. Do you think that could cause the markets further sell-off very quickly?
Well, the short answer would be yes. Obviously, we're all keen to find out what the exact procedure will now be. We've seen the Abu Dhabi government basically assuring the liquidity flow in the system, but that doesn't mean that the debt is going away, and I think that someone will have to pay the bill. But the key question, however, we're just talking before that, will we still be talking about Dubai 2 weeks from now?